Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to continue the theme of chart patterns and go through one chart pattern which I went through many months ago, which is exactly the same pattern as we saw developing over here. And this chart pattern normally leads to either a relief rally or the start of a big reversal to the upside. And I'm also going to show you why the RSI actually is confirming exactly that. It's a chart pattern that nobody really looks at because it's a complicated pattern, so you might need a notepad and pen to make some notes on this one. And if that sounds interesting, then without further ado, grab yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Before I begin, the usual polite reminder, please remember everything in my videos is for educational purposes and nothing should be taken as financial advice. So please do your wider research before you make any important investment decisions. So with that out of the way, I want to refer you to this pattern here that's developing and is called, if you want to know the detail of this pattern, then obviously Google it and then go into more detail. But basically how it works, how this works is that you get a big candle on the way down, like this one here, and that is followed by a smaller candle which is contained within the high and the low of the previous candle. So this candle here becomes an inside bar candle to this one, and then this candle here is followed by another candle which has a lower high and a lower low. So you get one Marubozu candle, a big candle like this red one here. That's followed by a smaller candle, which is contained within the high and the low of the big candle here. Then you have a third candle, which creates a lower high and a lower low. This pattern I'm going to show you is actually containing between 4 and 6 candles before it works through. So far we've got 3 candles. Then the fourth candle, or the fifth, or the sixth, so the next 3 candles after this pattern need to break above the high of this one here. So what we now wait for is a break in the next 3 candles above this level over here. And the break above this level is the sign to go long on here. That could be the start of just a brief relief rally, or it could be the start of a turnaround at the bottom of a bear market. Remember, this is a weekly chart, so this is a very strong chart pattern on a very high time frame. And if I show you what happened over here in this region when we came down at the 17.5, it's exactly the same pattern as what's developing over here. So this is the big candle that came down, which caused our previous low at 17.5 over here. After that, we got this candle here, which is really called the Harami candle. So it's a candle that follows a big fall like this and is contained within the high and the low of this big candle here. So what you wait for on the third candle, this one, is a lower high and a lower low. That's a classic Hikake pattern. And then on the next 3 candles, it has to get above this level here, which at this time was around about 21,800. And the third candle here is this one here, which went above it and closed at this point here. So from this candle here, what we got was a 28% rise as a result of this Hikake candlestick pattern. So what you've got now over here is exactly the same pattern. The size of the candles may be different, but the technical makeup of the candles is exactly the same. So what we have is a big red candle over here, just like this one. We have a second candle, which is contained within the low and the high of the previous candle, which is exactly this one. So this candle is exactly the same. And then you've got a lower high and a lower low. And the reason for that is that this low is trying to give the impression that we're going to go lower. And this is where the market catches people out. And instead of going lower, it should go higher. So what we're now waiting for is that after creating a lower high and a lower low, we're waiting for the next 3 candles. So what we've got to wait for now is that in the next 3 weeks, next 3 candles over here, we need to get above this level, which is 17,170. If we get a close above 17,170, the chances are very highly likely that we're going to hit one of these at least. So the lowest point would be the 18,200, which I mentioned in the last video, or it could be the underside of these candles here, which is quite a strong level, which is about 19,500. So you're finding support. So you have plenty of support here, rejection, rejection, support. So this would be a very good level. And if it really does play out very, very well, we could go to higher levels, even to this level here, at around about 21.5. So this pattern is incredibly important. And if it doesn't get to this level, then this is the level we need to be really looking out for at 15.4. If we break below this level, then obviously that invalidates this pattern and we're on our way down. But this pattern, this Hikake pattern, does play out in the majority of cases, possibly between 70 and 80% of the time. So we'll see what this week's candle looks like at the end of the week. But this is the invalidation point here at 15.4. If it goes below the 15.4, then that becomes invalid. And if we have a look at the RSI, we can see quite clearly that from this point here at 17.5, we made a lower low here at 15.4. 15,400. But look at the RSI. Is this giving us a clue that this Hikake pattern is about to play out in the bullish manner that it's actually normally does? The RSI was making a higher low here. So it looks like the momentum has actually picked up and that's not reflected in the price. And even in the on-balance volume, which I showed you in the last video, there is a bit of a pickup there as well. So the oscillators are showing us a great sign that seems to back up the Hikake pattern over here. So only time will tell, but it's something to look out for in the next 2 to 3 weeks. Okay, so I'm going to leave it there. Just a short video for today. And if you found value in the video, then please do remember to like and to subscribe if you haven't already done so. If you want to leave any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.